Kevin, you're noticing an interesting divergence between gold on the one hand going higher, and I was just looking at it's actually, I believe, now higher on the year, and the NASDAQ 100 or tech, big tech, going lower.
Yeah, what's pretty fascinating is that we've seen gold really outperform here in this post-earnings season where people are looking for safe havens, especially in an inflationary environment. And what gold is telling you is that what a lot of people are talking about is that inflation is because of the supply chain, right? And the Fed really can't fix that. And so when you look at even the options market today, you're seeing about 3 times the amount of calls versus puts. But what's interesting is that there's a lot of conviction in a risk reversal trade where someone came out and sold a bunch of March 168 puts to help finance further upside in gold out in May to the tune of the 188 strike price. So it's pretty telling that gold has been sort of a dead trade for about a year and a half now, and now it's finally breaking out even against its own technicals. So it's looking like it's set to shine for the rest of the year.
Yeah, I'll be curious about that breakout because right now, if you look at a longer term chart of gold, it looks as though it could potentially be a false initial breakout, but that trade you're talking about sounds very high conviction. But you know what's interesting, Kevin? Everybody's been talking over the last 3, 6, 12 months about digital gold or Bitcoin being this big hedge against inflation, but not today. It's down. Is that because of the risk-off sentiment?
Yeah, it's tough when having digital assets, comparing them as a store of value or inflation hedge, given the fact that they've benefited from the Federal Reserve and the easy monetary policy, and they haven't really been time tested. And I think that is coming into play now. If you look at the way gold's performed, it's really hard to be a store of value when it can drop 50% from November when inflation really started picking up. So that's pretty telling right now, because if you're going to want a safe haven asset, you're not going to go into one that's really levered to technology.
Yeah, good point. And speaking of technology, it's interesting because today with yields down, that should be a positive tailwind for technology. But because it's a haven bid on the geopolitical tensions, we see tech down. Do you see this dynamic continuing where we could see a rally in bonds and a sell-off in tech?
Yeah, and you just have to hit home on some of the tech earnings that really performed. NVIDIA actually had a pretty good earnings announcement, and you look at their growth and you look at their guidance, and what is NVIDIA really tied to as well, and that's cryptocurrency. And so it could be the sentiment from that. And so when you're looking at investing, we haven't seen that capitulation event, especially in technology, that you can see standard deviations blow out on VIX, right? We're still hovering just below 1 standard deviation. We would need a couple more moves higher in the VIX to around 38, 36, 38. That'd be 2 standard deviations. And then you can really feel, market sentiment get bearish and lend to a bottom. But we just haven't gotten there yet. So it's been short little spikes here, but nothing like we've seen over the past several years, like Volmageddon that we experienced in 2019 in February.
Yeah, and it certainly looks as though the VIX could be setting up for another big spike as it continues to round higher. And then very quickly, Kevin, something that doesn't quite fit today's picture, healthcare, defensive sector, is also down. In fact, it's down many of the days over the last 11 days. And I understand you're seeing a lot of put buying there?
Yeah, and so what was pretty telling is that healthcare actually saw 17 times the amount of puts versus call, and there's a lot of bearish sentiment going into healthcare, which, sometimes you've seen investors retreat in there, but over like you said, the last 11 days, it seems like there's going to be a lot more pain in healthcare. It really hasn't played out, and so more volatility to come in the healthcare space, according to the options market. 17 times, we haven't seen that in a very, very long time for healthcare.